Next on my list, I have the company Open Mineral, and I have the Chief Product Officer, James, but also his colleague, Boris Eicher here, who will give us a bit about their overview about what Open Mineral is doing. So Boris, over to you, please.
Yes, hello guys. We are a commodity trading platform. You can think about us as a Glencore 2.0. We'll show you a couple of the slides about the platform, what we do, how we create the value, and then we are going to provide you a couple of the live examples of where the value is created. James?
So for the time being, we cannot see your screen now. I think it's going to come.
Can you see my screen now?
Now it's working, yes.
Great. So just a quick overview for those of you who don't trade commodities every day like we do, but commodities are similar to any complex global trading relationship. You have at the end a seller, a miner, somebody who extracts oil, a farmer who just wants to get paid. And at the end of this complex transaction, you've got the buyer that wants the material. Now, there is a network, as we heard from Emmerich, of documents and people that sit in the middle to try and take the risk and logistical pain out of shipping and getting paid. This network of intermediaries has grown up over a number of years and relies and is characterized on the previous generation of exchange of information. So here we see there is a large amount of paperwork in between, often getting in the way of actually seeing what's going on. The industry is complex, lots of trust issues, lots of antiquity. So everything we've been talking about this morning, we feel it in the commodities market every day. And really the risk of fraud, if you look at the actual problems here, risk of fraud and error is significant, long and complicated supply chains. And increasingly, we feel the gap in trade finance and the Asian Development Bank and UNCTAD and others have rightly highlighted that we see finance moving away from the complexity in supply chains. So really that's where I wanted to think about and pitch a little bit today. So commodities markets can really suck. Even the best in the business suffer from fraud and error all the time. And you can see here some recent examples of the hundreds of millions of dollars that have been lost through trust documentation and information exchange issues. So what's going on? How can we get into some of this? And what's the consequence? So we've seen the lenders stepping back. We've seen alternative finance providers coming in, but certainly not enough to fill the gaps. What does that mean for the world? Volatility, price swings, inflation, and a large amount of people, if we're trying to be inclusive, kind of unbanked in this important part of the global economy. And I wouldn't want to paint a picture of unsophistication in our industry. We're in an explosion. We feel every day an explosion of public and private data driving decisions. I see there at the top picture, you see this is the Panorama facility in Abu Dhabi, where the ADNOC National Oil Company tracks in real time all of its global operations. You can see vessels. We all know about AIS data, the ability to track shipments and vessels. That's here. And increasingly automation. You see there the picture of a drone ship. Drones, not just to monitor and fly around, but potentially to actually become the autonomous backbone of global trade. All of these things are evidence of an explosion in data. But what is it that's stopping data from coming in? One other thing in commodities, it's kind of cool, I'll put it up here. We talked about satellite data. This is a real example. This is a synthetic aperture radar image, which is taken as you can take it at night through clouds. It uses radar to reconstruct an image. It takes two snapshots. One is before and one is after. If something is green, it means it's arrived. If something's red, it means it's gone. The point here is that you can track in real time, because commodities are big and you can see them in space, not just what you're doing, but what everybody else is doing. And these data sets are starting to come in to drive opportunity and decision-making, but they're not being used yet to reduce risk. How do we manage risk? The old-fashioned way, with contracts that are drafted and go back and forward in emails. And I love my colleagues here, and absolutely no disrespect, but for us to to maintain a global network of trade, we need a global network of offices with expensive humans. And even they, day to day, spend a lot of time, as Emmerich talked about, dealing with documentary overflow. So is there another way? My job is to work with Boris and the colleagues to try and find a different way of doing that. Here's what it's starting to look like. Not static documents exchanged backwards and forwards, but real-time live smart contracts. This is what a smart contract looks like. It's got everything of an original contract, a documentary contract that you can press print, turns into a document, but it's the same version. It's easier to work with. It can incorporate standardized terms from trusted bodies, and it really goes one step further to taking things out of emailed versions of PDFs. Once you have a digital layer, you've got to think about interaction with the real world. And much as I love the satellite stuff and the tracking, ultimately it often comes down to people working hard in far-flung parts of the world, wearing high visibility safety gear. What can we do to give them a better workflow? So for us, when we're moving material from far-flung parts of the world, typically we'll get a stamped document. What can we do to make that real, to make that dynamic, to increase the certainty? Well, if we can put something in an inspector's pocket that allows them to perform two-factor authentication, take a picture, be geotagged, that is a massive upgrade in the quality and the certainty and the trust around the transaction. And that data can then be bundled with identity management. Really big topic in our industry, KYC, anti-money laundering, making sure that the people that you're dealing with in a long, complex supply chain are bona fide and that the material comes from an appropriate place. So if you can combine all of these components of upgraded digital identity and data, you can start to build a digital asset around the transaction that allows more people to kind of participate. So it's gone from being something specialized that only a bank can get involved with, and fewer of those are doing it, to something that more alternative sources of finance can step in and do. So here, for example, is the ability to take a transaction, to turn it into something that is well understood, where counterparties can come in and provide trade finance through a platform that has de-risked the complex transaction that the commodity market is really struggling to finance at the moment. So that's a little bit of what we're working on. It's a pitch, but it's really just a call to action. If anybody in the audience, in the group, has experience, interest, wants to exchange notes, collaborate, knows potentially of some backers of these alternative finance structures, please do come forward, because we're very keen to collaborate with this group and really enjoyed the session today as an opportunity to kick that off.
Thank you, James and Boris. Really, really interesting. So is there maybe someone from the group left who would like to comment on that or to ask a question? Else not, if we hear from any other questions, we will be forwarding them to you. So thank you very much to all of the pitches here. It was really great to see some of what we just have discussed in action and existing solutions. Also great to see that there is also the need for the collaboration, and there are open arms on both ends to work together. This is really, really good to know. So thank you, everyone.